This conference will now be recorded.
Good morning, all. This is Larry Hamsey. It's a morning briefing for Friday, November 13, 2020. Yeah, we're about 8:40 of starting this, but going forward, we've got a schedule, so it's Monday through Friday at 8:30. Once we get on this platform, a little bit better handle on it, we'll also invite some folks from outside. But for now, this is what's going on. All right, quickly, econ calendar is, there we go. We have Williams speaking today. John Williams, I forgot who was he with. We got to get that down. Okay. PPI came in, and Willard, my favorite from St. Louis, speaking. It's always, I guess he's already been spoken. Williams was up at 7. This must be a breakfast meeting. Let's see what the PPI came in at. There we go. And okay, 1 to 1.3. Yeah, 2 is half. Okay. X for food and energy, 0.1, miss, yeah, and then this is a slight miss. This is a little higher. And that's about right. Okay, so inflation is not bad. It's 10. A little, maybe a little bit ahead of what, no, last year's not too bad. It's 0.5 year to year. This is one. No, this is below. No, yeah, that makes sense. It's below Fed target. Okay. Yeah, below Fed target. Well, because of the COVID. Yeah, that's what I'm saying. Okay. That's where we are there. And what else do we have? Nat gas, I don't care. Baker, big count, just look at crude prices. Okay. So we want to see what Bullard set up. Is it Dove? Williams, I forget who is he with. They used to do this. I'm going to write to this guy. Please. Yeah, who's he from? Yeah, which Fed chair? I'll get that down. I'll get the list to you. Okay. I'll have Tammy set up a list for me. Yeah. Today. Okay, so we're good there. Let's move forward. Charts. Okay. The overnight, we're up at 2,500 on the ES. Somebody better explain that to me. Maybe a vaccine news. But of course, the last hour is going to be crucial. COVID numbers are horrible. And so we'll see. This is could be tug of war. Yesterday we dropped quite a bit. At one point go down another, I think 35, 18 was the low, something in that range on the S&P. We had a peak there, we have rotated, you can see the rotation. If we turn around of this move, up move overnight now into a negative close today, then we're on track. Market call. By the way, one more thing. Speaking of market timing, Diego found a mistake. Look at how this guy looks at things. Okay. In the webinars that we record, we occasionally have showed the table that shows our charts. Okay. Now, within that, there was an error. He found it. He caught it. I agree with him. How do you agree with him? We went to emails from Tommy Digest. If Tommy Digest doesn't confirm an email, we're not in. Remember that. It's a two-man switch. So let me go to, let me show you what was you yourself for future. Yeah, data. We had a position showing here, right here at 325. There was not such a thing. There was no email. We had gone short, flat, and then long. No, there was no flat in between the two. Well, there are emails that say that. It shows the reversals. There was no flat. So we fixed that, and then the end result is that this is our chart now. This is the most recent chart. Actually, in the performance, it changes slightly, maybe less than 0.5%, or even less than that. It was just an error, yeah. And we have one less trade here because I never went flat. We went short long. Yeah, we went short long. So now, how do I remember that? Because it was the low. It was 23rd of March. That was the low. That was a Monday night low that we covered in long because we were expecting March 20th. Remember the spring equinox. So, having said that, I feel good. Thank you. And he apologized. I said, "There's no apology. I'm glad you got it." And you know what was copy paste of the Excel. When you have it, here, let me say again, when you have it, just to make sure we understand, when you have it, when you go flat, okay, and this is part of market time, we might as well take a look at it. When we go flat, there has to be no position. There's no gain or loss because the loss or gain is done in the line below before at the exit. This is just a pure entry. When you go from short to long, this number is belong to the short that you covered, okay, and the long that you initiate. So the exit and the entry because it's a reversal. This was not a reversal in March 20. It was a straight through. Of course, this is what we killed it. Look at what we did. Look at there to here. We killed this market for precision. Look at how many points on S&P. Of course, because these were very high shake areas. We completely killed it. We had a couple of mistakes. And we came back. Of course, this is what we're doing now. Okay. Now, the mark to market will change. Every day we have to put it in. This is the last line until we exit. So that's just to give us a peg where we are. All right. What have we done? We hooked down on the Macron oscillator, and the breadth thrust is also down. Volume came to 2.7. Not a big drop. This is not it. Us going up right now does not make any sense. Hi, Nancy. Hi, Dennis. This does not make sense right now for us to say this was it. We're going to go back up. This, to me, is the beginning of a fall. Now, Mark Rose was talking about it's supposed to be the Time Digest that is going to be. He thinks the peak will come on the 15th. 15th is Saturday, Sunday, Monday. That's what's going to be a peak. Could be, I don't know. I know the bias to Thanksgiving is positive. So the following week, we have to be careful. Notice what I picked for my option trade was November 4th, December 4th. Okay? As a strategist, you have to think about all these things ahead of time. A lot of what ifs. And only comes to me because we've done so much. Or genius. No, just over time, remember what things to look for. All right. Canaries. Moving forward. I hope you guys find this useful. Okay. There's a little bit of stuff we're going to talk about there and here. So let's go to the next chart. It's a little bit opened up. To me, the fact that we're having some issues here is not a bad news per se, because the index itself is having an issue. But NASDAQ not making a new high is a problem for me. See that? So we're measuring it again against itself. It bounced here. It has not bounced there. So we could possibly go and meet this rendezvous point 3400, which is 50 bar. Notice that that's what our targets on the option trade, okay, on PMT. We were not charting these. We fixed it yesterday because it's a new login. And these are proprietary stuff. They're not distributed. Just like Momo or SP2. We had to change the permission because it's a different login. Yeah, so it was a little bit trickier. We're working out the issues. As you expand, there's a little bit of wiring. It's that wiring. So, anyhow, this is the alarming 140. You go back, you'll see. You see what that happens there. That's the market is beginning to top somewhere. Could be a month forward. We're topping good stuff. So I think probably if we get close to the Georgia election, market could get nervous. Because the Democrats win that. When we get 50-50 with Kamala giving it that breaking vote, you're gonna have taxes and all that, and the market will not like that. So be careful. So don't get married to your stocks. Be ready, okay? Have the divorce papers ready. At least find a divorce lawyer. Yeah, on standby. That's what they call it. Beverly Hills. Okay, Beverly Hills. Okay, here we go. Look, what's happening with VIX? We are pulled down. Remember, it is running right now. We pulled down. Vol is going up on oil. This was yesterday that the vol went up because of the index went down. So, and this is the respective asset we're looking at. This week or Monday morning, we're going to be on F21, which is January 21st for the crude. We have to put that in because this is really running it against US dollar / crude, but US dollar is a mix of crude. I just running it against future. All right, process is good. So good. I'm good. All right, so moving forward, 1 second. Let me go back. We pulled back last night. Let's see how we go today. That's about neutral, -1. We dropped 1.25 sigma levels. Again, we're measuring it against itself. Why? Because we want to understand its vibration. It's all about vibration. Volatility is a vibration. That's all it is. Okay. All right. We have 7 attendees now. Awesome. JP. Who's JP? Please do not use initials, guys. Okay. Who's JP, please? Yeah, thank you.
Jim Pickus.
Oh, good. Jim, thank you, sir. Appreciate that. No worries. Yeah, just please let me know who you guys are. Okay. I'm not good with that aliases. So, and we don't, because I declare everything, I expect others to do the same. Thank you, Jim. No worries, my friends. First today, not a problem. Okay. So let's go here to the next stuff. We talked about 30, we got that. But I'm running a little bit late. I'm trying to move a little bit faster. Okay, this, as expected, pulled down. We knew it was getting exhausted even before we got there. We had a huge run. This was a buy point. We took 3,000 points up. It was expected to pull back. Yes, it's understood. I don't understand what this is. Could this be a bait where the market was up on a overnight? Specifically, I'm talking about this chart right here. This is overnight, okay? Could this be a bait? We're putting it up. Maybe it's a Friday 13th afternoon. One bad news, it could be a bloodbath. Should we be short here? Not necessarily. Not just because the market timing is. It's just you got to be on an intraday basis. You got to really look at order flow more than anything else. Market timing works on the settlement data. So by the time we get to, let's say, 3 o'clock, 3:30, it shows its hand. You cannot be wrong all day until then. Okay, so you gotta have other mechanism for that period. Point, Nancy. Good. The stock outside, there's a rendezvous point that's coming, but if this thing's tail turns, and sometimes it turns early, well, then we're gonna shoot down. I'm not saying we're gonna do today, but I think by Monday, Tuesday, we should be in an area where this signal should be good. That means we could go up and then do an N. I love M's. Okay, just like you and I like W on the downside, M's are good on the upside. So to find the top. The key you gotta watch is that tops could be ever occurring while they're usually a V. Okay. Bob Grossi, welcome, sir. Okay, let's go to SQ. SQ is hedging up. So that says the big boys are beginning to put some downside protection on. Deep out of the money. Okay. Puts sometimes on the spread, sometimes they're so cheap you don't even want to do that. And this is for SPX. I suspect it would be this range. Now it doesn't need the market to go down. Remember that. Its delta is going to change exponentially, right? It's logarithmic. Most of the actual is based on natural logarithm. Yeah, as you can call it in math. So all you need to do is some movement down here. These 2800s, 3,000, 2,800, 2,600 will explode. So this could be for a penny or a nickel, but they're buying 10,000 of them. Okay, so that's what this is detecting. This just detects existence of those trades. Net. Remember, it's got to be netted. So it's after the close. It's about an hour after the close is this minute. So we have 131. In the PMT, there's a table what this means. 131 means because design is 150 to 100. Obviously, we haven't hit the bottom and we have exceeded the top. These are all-time highs and all-time lows. We use same colors everywhere. Why? Your eyes gotta get used to it at a quick glance under pressure. I'm not worried about trend. A lot of times, it's giving us inverted signals. Treasury yields. We pulled back yesterday. Obviously, rendezvous point is 1. That's the monthly resistance 2. You with me? That's weekly resistance 2. Based on the previous performance. You can see how previous month data predicts the next levels, and we went to 937. There's a reversal there. Let's see if we can get to 10. For that to go, that means the economy is going to get better, at least the perception of it. That market we're going up, not down. As the market is going down, the yield should drop. The yield should drop, okay? Because the demand for borrowing should drop. So that's what that is. These are yield to maturities. This one is a discount rate. Yes, because that's 91 days, you have to compound it 4 times to get the equivalent bond yield, EYB. For those of you who are in the bond, interest rate business, okay? We've added, so you know, at night we've added the YM. That's added now, and Brian's posting it. These are the daily stuff. So let's finish here. Let's go to our chart on one of our favorite charts. Blow it up. Go to, if you guys want this, I could send you that link. I would actually just copy that, put an email, send it to you. You guys let me know. As we have said that, went to 85 on pullback. No magic. 80 and 85 has always been a magical area to watch for. And you usually don't get much after 85. To the point it pulled back yesterday. Let's see how it vibrates here. Remember, look at the slope and separation of the moving averages. 20 and 50. That tells you a lot of, that gives you a lot of talent. See that became a kiss, not a cross. I pulled up. Now we see the bull heading up because it has a time lag, right? We're half cycle out of phase. So it's trying to catch up, all moving averages up. Trying to catch up. The issue becomes the two of them. How do they get to each other? I think we're going to spend some time over here before we get a resolution. Obviously, excuse me, the next one is down, not up. Obviously, I mean, you got to say, when this hits up here, it's a very little high up to go. Very. Now, it could be in a area where it's a very slow rising top versus a V bottoms. Yeah, so don't get fooled there. But this is a very good measure. It's a percent of stocks of 200 moving average. End of the day, also an hour after the close, also just like SQ comes in late. All right, let's go to overnight and our work, and then we're gonna wrap this up because it's almost time. But yeah, but remember, we started. Like 10 minutes late. So, day one. Yeah, overnight. This is the 30-minute, very professional way of looking at it. A lot of professionals look at 30 minutes on futures because it's just damaging to move so much. But watch out for 35.49. What's this level? 890. If that's broken, we got a different trajectory. More toward downside. And CI said we're going to do that, most likely on a 30-minute basis. Now, let's see how the open works, because that traffic takes over, obviously. The 5 is ready for you guys. If we switch, if emergency happens, we can go here. That's always ready right on this machine. And then always look for Tony. This is a point. I'm sure you're going to see it ad nauseum on those webinars this weekend, Tony. But I'm sorry. It's a new paradigm shift. We have to pound it in. Take a look. Look at this. Look at that. And a small window, but you could see over time the occurrences. What we want to look for, Tony, is a confluence of numbers. If this does 11, this is the small blocks. So projecting a move to 11, 9100. Okay, I want to look at 9100s other places. Okay, do I see anything? No, that's 97, 936, 55, 97. So, okay, yeah. I would say 55, 57 then. Okay, this is what I'm looking at. That's on the upside. Same thing on the downside. Now, these are Bijan bands. They're derivatives of Sigma channels / Bollinger bands. Of course, they're modified. Bijan is a good friend, but as a matter of fact, I was talking to him yesterday. But he did it for his MTA, CMT degree at MTA, Market Technical Association out of New York, and it's published work. But I modified it to what I need to do for this. Plus, modified to accept the OTF bars, because these are those bars that have volume. It has to be volume driven, and they're filtered by size of those blocks. So those are slightly different. This is Kettler bands, folks. I'm just giving this little quick brief to Tony. He just joined us yesterday, and these are Kettler bands. Of course, they're also modified. not just the inputs, but also how to take care of the OTF bars, because we don't go by price alone. Now, we call them K bands and B bands, just to keep it simple, so we can say it fast. What I'm saying, K targets and B targets. We're really looking at them as targets and anything else. And again, confluence rules. Here's your CI and CI diff, also modified to take care of that data, and goes in there, massage there, and we setting a 30 level height there. This is lower. Why this is lower, Jack? Okay, move this higher. Yeah, this should line up. Yeah. Okay, we'll fine tune it. Let me save it. Always save your work. That's just good habits. Let's go to Excel Plus. Here's your Excel Plus, and I run this. This is a master account too, as a backup to master, just in case something happens. This machine is ready to go, line it and so forth. So that's why I have what do you call it in there? I have a trade environment in this. I can jump in, change account number, and hit mainly to exit if there's a problem. I'm not going to trade with a broken master one. This is master two, but that's an i9 machine and a 65-inch. I can do quite a bit of work with that. But anyhow, and plus it's a helium cooled. It's got a radiator, yeah, so it can handle. I'm not sure about this machine, how far, because we're running multiple accounts. Our minimums are 250, so these are sizable accounts we have to watch. No, yeah, and so Excel says Excel Plus. This is our largest block that we have detected. Now, we don't have any verticals here, and this is what we publish at night. It's because nothing is triggered. The last vertical we had was here. There you go, that's your bar. Remember, you have to see the cross, okay? And my triggering here is a little bit steady. My triggering here is yeah, I gotta go there. I think I'm putting it at 15 or 20. Maybe it's 15. I have it a little bit of earlier triggering because, or late triggering because I want more because it's Excel Plus. Same thing you see on that screen on the other machine. To be a comfortable margin, I'm hitting it at we're triggering it early, not too early. Okay, so why? Then the buys are good and the sells are good. If you look at that, I think we have one here. See that sell is good. It got set up, never managed, never got to there, and then boom. And this was a no man's land. I understand that, but then became left translation. Became you sell the rallies. Okay, now it's getting up. No man's land now sort of built, and if this okay. Now if it holds it, okay, it would be a buy. If the spirit did, it pulled down. It doesn't know what's going on. You're gonna have some period of the tug of war with that tug of war. If we move down on the Friday the 13th in the last couple of hours, I think we've started to move down. Good. This concludes our meeting. Thank you for attending. I'll be post-processing this and putting it up there. Any questions? This is set up to run at 8:30 every morning, Monday through Friday. Okay. We'll be doing it on this format. I hope the audio was good. We'll find out. We're going to play it back and then we'll put it on YouTube. It's on our YouTube. Thank you so much. No worries. No worries. My best to your family, Simon. I understand. No worries. Gotta take